Hi, folks. Ryan Honeyman here from Lift Economy. Many folks have come to us over the last 10 years and asked, how do I get more involved in creating an economy that works for the benefit of all life? They also ask, what skills and experiences do I need to help make this transition? So 3 years ago, we created something called the Next Economy MBA to help address this and similar questions. Lift Economy's Next Economy MBA is an online course that's designed for entrepreneurs, aspiring entrepreneurs, students, recent graduates, employees, and folks who want to learn more about transformational next economy strategies and businesses. Join the growing alumni network of nearly 250 alumni who've gone through this program and learned essential skills and hopefully built lifelong relationships for catalyzing businesses in the emergent and regenerative economy. So we encourage you to check out our course. You can go to lifteconomy.com/MBA. The next course, Cohort 7, starts on September 21st, 2021. So once again, go to www.lifteconomy.com/MBA. And now, on with the show. Welcome to Next Economy Now. The goal of this podcast series is to highlight the leaders who are taking a regenerative, bioregional, equitable, democratic, racially just, and whole systems approach to creating the new economy.
Our guest today is Kristin Hull, partner and portfolio manager at Green Alpha Advisors and also president and co-founder of NIA Global Solutions. Kristin, welcome to the show.
Thank you so much for having me, Ryan. This is really exciting.
Kristin, tell us a little bit about your background. What were you doing before you got into the impact investing space?
Sure, Ryan. So I actually have come full circle back into investing. I grew up with my dad starting a trading business in my garage. So at a very early age, I was learning about puts and calls and commodities and futures and pork bellies and the price of soy. And so had a pretty interesting exposure to markets. And at the same time, I really wanted to make a difference in the world. And so while still being pretty immersed in that family company, I became a teacher. And I taught in Oakland and San Francisco for many years. I started a charter school in Oakland, and then fast forward, our company was growing and we ended up selling it. And at that point, I became in charge of the family foundation. And that's when I really got into impact investing. I learned that the endowment of the foundation could be used as tools to address our goals of social change and environmental sustainability. And so helping to have that portfolio become 100% invested with our values was really my entree into this whole world.
I saw in your background on one of the charity boards you sit on, you host an annual summer benefit with Brett Dennen performing.
I do. That's a super fun thing. You should come.
Yeah, I actually saw Brett Dennen in London in 2007 at his first international show. I love everything he talks about. It's very positive messages.
Oh, we are lucky to have him on our advisory board at the Mosaic Project. And I will get you the dates as soon as we have them for our summer concert next year.
Awesome. So tell us what you're up to currently. Tell us a little more about Green Alpha Advisors and NIA Global Solutions.
Sure. Well, just to back up, I started NIA Community Investments, and NIA means intention and purpose. It comes from the Swahili and before that Arabic. And so really doing money with intention and purpose. And when I started NIA Community Investments, I was really investing in my local community, particularly in Oakland, really looking for clean energy solutions for social justice whenever I can, investing in women and people of color. And I really loved all of my small local investments. And I was a bit confused why everyone wasn't investing in this way. And so I took some time to dive into what some of those answers might be. And I came up with a list of about 8 different things that were barriers or prohibited people from investing in their local community. And some of those being financial literacy, not really understanding how to do an investment. Some of it was finding out how to do them. Some of that was due diligence. Who would help do the due diligence, or would my team allow it, or could I get my family, my husband, my board on board with this idea? And so the list went on and on. But one of the main barriers was that people really were stuck in the public equities. And our system is kind of stuck in the public equities, I would say. So everything from 401ks to modern portfolio theory and asset allocations, a large percentage of most of our investments are in the public equities. And so as much as I was interested in my local economy and my local investing, I said, well, to fix this system, we really have to fix how we invest in public equities. And what does that mean? And so could we find the good and emphasize the good of the companies that are really scaling our important solutions? So I identified 6 solution themes with NIA and went out to find them in the public markets. And so that's what we do. Everything from clean energy to our biggest healthcare issues, such as AIDS and our worst cancers, HIV, some of our tropical diseases, which, interestingly enough, with climate change, that little tropical belt is expanding as our globe heats up. So our tropical diseases are a big issue. So getting in front of those now is going to be really, really important. And so finding the companies that are often publicly traded are the ones that are able to work on these, to be really innovative, and then also to take them to scale. So we're looking for access and then also innovation in these companies. And so building a portfolio around solutions themes so that people, instead of just screening out some of the things that they don't like, maybe alcohol or tobacco or firearms, or now it's popular to screen out fossil fuels, we're actually going towards the solutions and finding best in class for those companies that we think really will bring us to that next economy, fair, just, and sustainable.
Who are some of the maybe like 3 to 5 publicly traded companies that you're most inspired by or believe that align with that impact thesis?
Oh, sure. So a lot of them are right here in California. We have a big innovation bed here. So, and a lot of them are in the news, such as Tesla and Solar City these days, who are working on really sustainable transportation as well as solar and battery storage. So that's all going to be very, very important in our next economy. Also, First Solar has some of the most innovative technologies that are really working to help scale our receiving that energy from the sun. And then there's other companies that are really important, for example, for financial inclusion. For us to really do this on a global scale and get to that next economy, we're going to need to include and inspire everybody. And so Resona Holdings is a wonderful company in Japan that includes women on the board and also makes loans and products specifically for women, which is not very common in Japan. Another company that I love in South Africa is Sanlam, and they have win awards for Black leadership frequently, and they do loans for entrepreneurs starting in South Africa and then all of the English and Portuguese countries in Africa, as well as India. So I'm excited about a lot of our companies, actually.
That's fascinating because, one of the challenges I think many people face, and, your experience investing in small Oakland-based companies where you can really see the impact to something where publicly traded companies, Tesla, Solar City, for example, do you think that, we need all types of impact, but does it seem like being a publicly traded company inherently limits your ability to some level to create impact?
So I would, that's a common myth, I would say, that, we think of impact investing as our, young, sexy companies, entrepreneurs. I call them the Stanford boys that met in graduate school, came up with this high-tech, fun solution and are working that. And it is fun to get involved in a company early on and watch it grow and watch its struggles. And yet, what is our ultimate hope for these companies? That they IPO and make a ton of money. And so what happens then? Do we let go of them? Are they no longer part of our portfolio? Do they cease to exist? No, they become publicly traded companies at scale with a ton of money to do all sorts of things. So if we're really thinking about impact, I would argue that our largest global economy corporations are actually having the largest impact. So can we invest in those and influence to make sure that they are really having a positive impact on our Earth?
And one of the things that many people struggle with as well in this space, is measuring impact. How do you go about measuring impact?
Oh, Ryan, such a great question. So it's super interesting, that we've as we grow this field of impact investing, we've decided that we will have measurable impact. And yet it's fascinating to me in that we really don't know how to do that yet as an industry. So SASB is doing an amazing job as far as determining what is material and what kinds of things affect what we need to know about a company in each industry. And I think that's really important because it really is apples and oranges. And we could talk about impact on many levels. We could talk about how many trees are being planted. We could talk about, and we do talk about, how many jobs are being created. But then I want to get further and ask what kind of quality jobs are being created, and not just a job, but is it an amazing job? Is it something that employees are proud to be doing? Also, do they have benefits? Do they have maternity or family leave? Which is super interesting to me because it's been determined that companies that provide a quote unquote generous family leave actually do better for the bottom line. And of course, their employees are more loyal. So that's interesting as we build and bake these companies for impact, both how we're going to measure it and then how we're going to have our practices play out in the business plan. So both at NIA Community and at NIA Global, we are reporting out the impact that we're seeing, and we're not actually quantifying it at this time, though I hope to be able to do that in the future.
There are some famous funds, mutual funds, that specialize in social responsibility, like Parnassus, Domini, many. Are there ones in particular that you would recommend? I mean, I guess there's probably like SEC regulations. You probably can't recommend something on a podcast, but are there funds out there that you admire that people might want to look at if they're interested in socially responsible investing?
Well, I'll say that the funds that you mentioned were some of the originals, and they really did some groundbreaking work as far as SRI, and that really is screening away some of the things that we don't like. Again, like the firearms or tobacco. Some of these get into fossil fuels, not that many yet. What I would hope to see in choosing investments, and of course in creating the investments that we do at Green Alpha and at NIA Global Solutions, is really looking at what is this next economy that we want to get to, and what companies are going to transition us to getting there. How will these companies either eliminate our global risks, reduce our global risks, become more efficient? So I'm looking at companies that are doing renewable energy as opposed to extracting. And that's a very different way to build a portfolio than it is to do a socially responsible one, which is screening out kind of the bad players. The other thing I would say is to look for companies that aren't necessarily hugging the benchmarks. We have, because of modern portfolio theory and a number of other factors, we're pretty tied to watching what the S&P is doing. And yet, if you think about it, that group of large companies is the incumbent economy. And a lot of those companies are extracting, and they don't have the best practices that we're going to need to live on a sustainable planet. So could we benchmark to the world that we want to live in and then build a portfolio around that?
How do you balance impact and return?
That's a great question. And there's a pretty good belief or myth out there that you can't do both. And our point at NIA Global Solution is to prove that we really can. And so we have a firm belief that companies that are building those solutions and scaling them will be rewarded by the market. And so that's what we've set out to do. We also are following the research that is really stacking up, saying that diverse teams have higher bottom line and higher financial returns. And there's some other benefits as well of having diverse teams. So by investing in those companies that are going to be more innovative, that are have potential for growth, that have potential for higher returns, we think that we can do both.
And companies that folks might be familiar with, like Nike or Starbucks or Google, do those fit within what you would consider to be impact? Or is, I guess, what is the sort of the lens that you look at a company with? You mentioned, women in leadership, creating good jobs. How would you evaluate? Like, how do you evaluate companies like the ones I just mentioned?
Right. So none of those would fit our buy list because we have our 6 solution themes, and we're really looking at which are the companies that are going to get us to that next economy. And Someone might argue that Nike has some interesting practices, but we also find some issues with that company as well.
Yes, I think a lot of people would have issues. Maybe more issues in the '90s when they were busted a lot for child labor. But
Right.
yeah, what is an appropriate return on investment? The preface to this question is, even maybe this is more on the sort of a venture level question rather than a public equities question, but even mission driven venture capital or high growth impact investing in earlier stages seems to be inherently challenge. It seems to be inherently flawed because you still require an exit. And one of the questions we have at Lift Economy is, if we're going to create an economy that works for all life, is growing rapidly and having an exit in 7 years, even if it's a mission-driven company, is that the best thing for the economy?
So, Ryan, you point out some really interesting points about how our investing and growing businesses is set up currently, and what do we need to do to make this a really sustainable plan and really well-baked. So when you ask what type of return is appropriate, I would throw back at you a question of, well, what are you trying to accomplish? And I would also ask you about risk. So when you're thinking about investing in a company, I often ask, what is the risk of not making this investment? So if I don't put money into this company, will they be able to launch? Will they be able to grow? Will they be able to scale? How desperately do I need the solution, whether it's to climate change or to healthcare or to some of our educational gaps? So I really think about return in a different way, because I really see that our money and our investments can be tools for social change. And so how can we use finance in the best way that we can to achieve multiple goals?
And maybe another one on the non-public company question. So are there alternative exit strategies that you admire or see as a possible solution to IPOs?
So I absolutely do. And one of them is just simply called debt. So loans. Sometimes I think, well, we could, as angel investors, VC investors, we could, invest in equity in these companies. And sometimes that's absolutely what's required. Other times, investors really need to keep control of that company, and maybe it makes more sense, for entrepreneurs to keep control of the company and for entrepreneurs to have more of the equity as they move forward, helping to offer equity for potential new hires, bringing on key talent in early stages. And so sometimes I think the best instrument might be a loan. And so it really depends, again, on what you're trying to achieve and what's the best business model.
I love that you're talking about what's the next economy, even when having the lens of viewing publicly traded companies. So let's imagine that you're successful and this next economy is starting to come, in the next 25, 50, or 100 years. What do you see as what's the kind of plan for NIA over the next, Yvonne Schoenard likes to talk about the 100-year company. So what do you see NIA being able to do in the next 100 years if you're really doing your work really well?
Thanks, Ryan. If we are doing our work well, NIA investing will become a standard such that all companies that are deemed investable, that it would make anybody's buy list, would be working on key solutions to climate change and some of our largest risks. They would be moving us forward, and they would have the business practices and the employee and client practices that really, really are sustainable and enhancing to our world. Living on a planet with limited resources, we really need to think, how are we best using our resources, and how are our largest companies enhancing those resources as opposed to extracting? So thinking about renewables. And also, if we really are successful, people will see and investors will see that companies need to have diversity, inclusion from the very beginning. And they certainly need to have diversity in leadership. So if we are successful, NIA will be that standard.
And do you see in 100 years, does the economy really able to support multinationals, or will the economy need to be readjusted to have more locally self-reliant economies? What do you see in that regard?
So I do think there's a place for multinationals to play. Our world gets smaller with the internet. We are really a globalized economy. And so can we have the best practices, the best communications, working across nations to solve problems? Absolutely.
Kristin, what are you most excited about generally? It doesn't necessarily have to be in impact investing space, or it could just be some things in current events, or could be within impact investing. But what gets you most excited right now?
For me, what I'm really excited about is empowering people to both understand their investments and then to jump into this arena. So we have a lot of work to do there. We don't have a formal curriculum in high school or even in college, that matter, to learn about banking, to learn about investing, to learn about returns, to learn that all of our money is having a role and playing a role in this world. And so can we have it have the impact, and just aligning it with our values as far as what we want to see. So we have a heavy lift there. Again, because we don't have a formal curriculum in schools, how can we teach people financial literacy and investing savvy so that people can jump in and feel really empowered about what their money is doing?
So you have a PhD in education.
I do.
What is the course? It's like a year-long course to understand. Like you said, you're most excited about people learning about their investments and learning more about money. What is that course that you're going to teach that everyone would have to take if you were the benevolent dictator, to learn about what you think people should know about?
So Ryan, honestly, I wouldn't have it be a year-long course. I would have it embedded into every year that we start. So, and we do a tiny bit of this in elementary school as far as when we're learning to count and when we're learning to add and multiply. We sometimes use money as a way to think about our systems, and 10 pennies equals 1 dime, and how many dimes and nickels make 1 quarter. And so we do some money curriculum. However, we don't really do it as far as investing. And so just learning about also what it's going to take for people to retire, right? If we talk about people retiring in this society, and everyone is skeptical of Social Security and how much that provides. So what is it going to take to have a job? And for example, even just saving 10% a month is a pretty brand new concept to a lot of people. And why would we put something away when we could spend it? So those kinds of concepts, I would embed in the curriculum from day one, and I would spiral it such that each year you were adding on a little bit more and revisiting some other themes, and then actually practicing. So I might have an investment fund in a high school where people were really exposed. Just like in voting, people are much more likely to vote if they have seen a voting box, if they have seen an actual ballot. Voting can be kind of scary when you go and you have to do it alone. So bringing that into schools, or having schools go out into voting. Similarly, I would have people from banks, maybe not the big ones, maybe just the small local our local banks, but talking about what are those loans going to? When we deposit our money in the bank, a lot of people think it just sits there. But what is that deposit doing? And is it going out to loans in our local community, to entrepreneurs who are starting small businesses? Or is it being to housing and subprime and derivatives? And, and knowing that we have a choice about what that money is doing, I think is really essential to embed into our curriculum.
And what are the biggest...
Another thing I would add, Ryan, is just asset classes. That shouldn't be a mystery. We should all know what a stock is, what is a bond, what is a loan, what does it mean when we're in cash, but our money's sitting somewhere else? Because does it cash? People think it's in your wallet right now. At any rate, so some of these terms, I think we could easily fit into a high school curriculum.
And what are the biggest blockages to that being implemented? Is it sort of apathy from people who just don't care, or is it actually it's not there's not enough strong voice to get it integrated into curriculum?
That's a really good question. So we have these systems and institutions, and they're created, and once they're big enough, they're pretty hard to change. So doesn't mean that we can't, but it's a pretty big lift to infiltrate all of the curriculum. And there's a lot of reasons for that, right? So who writes the textbooks, and then who has a handle on that, and then who sells the textbooks, and then who approves the textbooks. And so there's a lot of different bodies and a lot of different gatekeepers to having that curriculum, although it's going to be essential as we move forward.
It's almost like someone should start their own charter school, right? and have the.
One could do that. I'm not sure that I recommend it.
Did your school have financial debt bonds, stocks integrated into your curriculum?
So we don't at this time, and I'm working towards that. Absolutely. We have, just to say, it's a K-8, and I do think that middle school is a very appropriate time to expose the language and to expose some of the thoughts about money.
Credit default swaps and mortgage-backed securities. They can handle that at like fifth grade. No, I totally agree. I wish I feel like people learn about it when they're maybe never, but some people learn about it when they've been invested in maybe ExxonMobil for 25 years and they didn't know because it was just in their, Charles Schwab 1000, just invest in the top 1,000 stocks and that's your mutual fund. I don't think many people realize that, if they're voting for someone like Bernie Sanders and then look at their portfolio investments, there's a big disconnect there.
Absolutely. There's often a huge disconnect. And when people find out, I call it opening the envelopes. And sometimes I hold people's hand and we do it together so we can really unearth what is there. You mentioned something. A lot of us have a financial advisor, and they sometimes don't know because they're told that, following the index is an appropriate, smart, low-fee way to do things. And yet you are often hugging a benchmark, and you do have some pretty horrible companies, some damaging companies to our earth. And there's actually quite a few financial reasons to divest from fossil fuels at this time. I do have to give a shout out to our college students and the movements on college campuses, because by starting the divest reinvest movement, they really are asking us, they're making a call to say, own what you own. And of course, for us to do that is a step backwards, is to find out what we own. And there's so many reasons that our financial industry is a little bit opaque and not transparent. And yet this call is to find out, hey, financial advisor, can you help me understand what's in this? And can you help me align my assets with my values such that my money is at work doing what I want it to do in the world?
Can you explain divest invest just for folks who don't know what that is?
Oh, sure. Absolutely. So it's a movement started on college campuses and by college student activists who were upset and continue to be upset that their college endowments are supporting some of these bad players, I would say, or some of the extractive companies. And there are certainly some moral and ethical reasons that students are calling out to get their money out of supporting these companies, such as Chevron, Exxon, BP, et cetera. But again, there are some really important financial reasons that these students may be onto that are really smart. There's quite a few reasons, such as there's a lot of oil in the ground that these companies are recording on their books. And as our earth heats up, people are more and more aware. Policies are changing such that most of these companies are very unlikely to be able to drill that oil. And so we're calling that stranded assets, and they're stuck on their balance sheets, and they may actually not be worth as much as they're saying. And so they've been in the news quite a bit. So the movement is really calling to divest from the extractive fossil fuel companies, to remove those from your holdings and your portfolios, and to reinvest in some of the solutions. And so that's what we're hoping to be an answer to that call at NIA Global Solutions and at Green Alpha Advisors, where we're offering fossil fuel-free portfolios, and again, really thinking about the next economy as a reinvestment option.
And is there a book or number of books that you would recommend for people who are listening who want to just learn more about this?
Oh, Ryan, thank you for let's see. I'm actually in the middle of writing my book. I'd love to say, it's out and available. The working title is Voices from the Field, and I'm highlighting in interviews and essays what work is happening in our new economy and what's happening as far as impact investing and what women and people of color are engaging in that work. So that hopefully will be coming out soon. In the meantime, a book that is coming out soon is by Joel Solomon of Renewal Partners, and it's called Clean Money Revolution. And he has been involved in this movement for a long time and has some really interesting things to say about how we can both be in touch with our money and invest for the world that we want to see.
Phenomenal. And your book title again, just so people can have a heads up when it's coming out.
We're about a year out, and it's called Voices from the Field.
Got it. Who else are you watching? Who are the other investors that you admire?
So there's a group at Bali, the Business Alliance for Local Living Economies, who are doing really fantastic work. And I would say not only are they thinking about investing differently, they're really coming from a place of we have these systemic and global problems and big issues, and how can I use my money to specifically address those issues? So everything from me thinking about social justice in Oakland to investors thinking about soil health and how can we use our money to invest in whether it's farming practices, different types of agriculture to really increase our soil health, which of course is tied to our carbon footprint as well as our CO2 levels. So really interesting work happening at Bali. And there's also a lot of women investors who are thinking about a gender lens. And I would say the smart men really get this as well. So I don't want to leave them out of this. However, I've mentioned diversity in leadership and having that perspective as we're going into an investment is really changing the way we do things as well.
You mentioned Joel Solomon. I imagine Esther Park and Sally Calhoun from Sienga Capital. Are there other folks at Bali that you look to? Just interested to know who the actual folks are.
Oh, sure. So they are my dear friends and colleagues. There's quite a few people. So just to name a few, I would say Deborah Fries, who's doing some really interesting work in Boston with Boston Impact. Dawn McGee and Mary Stranahan at Good Works Ventures in Montana are really thinking about local in a very deep way. Of course, Sally and Esther with Piscinas Ranch and Cienega Capital are doing fantastic work. And then we have others coming online all the time.
Phenomenal. Yes, the Bali crew is very amazing at changing the world. What do people never ask you that you wish they did?
Oh, such a great question. I think I would like a little more immediacy, and I would love people to ask, how can I also move my money with my values? And right away. I think we're intimidated sometimes about getting in there with our money if we didn't grow up with that background. And so there can be quite a bit of inertia keeping our money in some of the stuff that isn't in alignment with who we are and who we want to see, what we want to see for our planet. So I wish people would ask me how they could get involved as well.
Yeah, it does seem like when folks have money, there's a sort of maybe natural conservative. I mean, this even plays out with foundations, right? It's the challenges like climate change are now, and yet there's a hesitation to touch principle in many foundations. It's let's just invest the interest. But it's like if we keep sort of giving only 5% or people don't move their money sooner, the climate crisis and things like income inequality are going to be so great that the risk is actually much greater, it seems like, than just sort of incrementally giving to these challenges.
Well, you and I are part of the choir, right? So how can we bring in more sopranos and tenors and just build out that choir? Foundations, honestly, you would think that would be the easiest start because by definition, as they were incorporated and built, they have a dedicated mission that they've each said that they're going to solve. So to have only 5% of their assets working toward that mission in nonprofit giving and to not capitalize or utilize the 95% that is in that endowment to work towards your mission seems criminal to me. It really seems that there's something very odd. And the fact that those dollars aren't working towards their mission and oftentimes are detracting from their mission is really problematic. And I'm hoping that we're going to see some gaps and some loops closed there shortly. Just as you said, there's an urgency. And it's interesting. I think some of the foundations get it as far as their giving, depending on what their mission is. So, for example, if you want to solve HIV or AIDS, the time is now. You don't want to wait and do that spending and that research and that financing for another 30 years. Similar for climate change. Those of us who want to address climate change, we know that the time is now. There are some other foundations, though, that are really more about legacy and whether it's arts or culture. And I would love to bring them on board to let them know that arts and culture won't really be as important if we don't have a sustainable planet with thriving people on it.
What do you need in terms of support from listeners? We have a lot of folks who are very interested in this. Is there any events or initiatives that you have coming up that our listeners could support you with?
Oh, thank you so much. So on my end, I'm trying to build out 2 websites. And so hopefully by the end of the year, we'll have a lot of content. And I would love for people to just check it out and provide some feedback. We're hoping to, we already have all of our investments with NIA Community posted just as a way to be completely transparent at what we're up to and then offer ideas about ways people can get involved. So I'm working on the 2 websites and the book. And then really my biggest mission right now that everybody can do is to bank with their local community. Our local CDFIs, credit unions, and our local banks are doing such fantastic work. And every penny that we put into those institutions makes a big difference. So join me in that.
Could you name the websites and perhaps how folks could get in touch with you if they're interested?
Oh, absolutely. So for investing with NIA Global Solutions, it's just that, NIA, globalsolutions.com. And then similarly building out niacommunity.org. And again, just really hoping to bring more transparency, a few little thought pieces about how people can get involved and things to think about when making investments.
Fantastic, Kristin. Maybe the last question is, are you optimistic or pessimistic about the future?
I am a glass half full kind of person. So I run on optimism, and I try to encourage others that we have to be optimistic about this. That's how we're going to get it done. We have to come at this from a holistic way. And I think that means having optimism about our planet and about where we're headed as a human species. And I think that we really can invest our way to that next economy that's fair, just, and sustainable.
Well, thank you so much, Kristin. I've really learned a lot about, I think I've maybe had a misperception around public markets and their ability to create the next economy and create impact. But I really appreciate you correcting that it's not just about Nike and Starbucks and Google. There are companies who are really driving that change. So I just want to appreciate you for opening up my own mind about that.
Next Economy Now is a production of Lift Economy. To listen to all of our episodes, go to lifteconomy.com/podcast. That's LIFT economy.com/podcast. You can also sign up for our monthly newsletter at lifteconomy.com/newsletter. Please also rate and review our podcast on iTunes, Spotify, Stitcher, or wherever you get your podcasts. Thanks for listening.